Welcome to Envisioned Broadcasting, the station designed to encourage, equip, and empower you for growth and success. Presents Women Emerge with Melissa Lambert, a show that shines a light on spiritual growth, health, purpose, and financial education. It's time to emerge and begin to live out your dreams, walk into your destiny, while making a difference in the lives of many.
Welcome to Women Emerge with Melissa Lambert. I am your host, and I am so excited to be joining you another Thursday. Happy Thursday, everybody. It is the second Thursday of the month, and you know on the second Thursday of every month, we have a special guest. This is the Truth About Money section. This episode is all about money, and we have no other person that I think that will be good to explain this information but Mr. Tony Chambly. I am excited to really be able to grace this platform with him. But before we even get into who is Mr. Tony Chambly and this amazing topic that we're going to discuss today, let me just share with you that the show is being sponsored by who? Women Emerge Network. This show is sponsored each and every time by Women Emerge Network, a network created for women, men, and children to help bring families' dreams, their destiny, and their business together. Remember, Women Emerge Network has the 4 pillars. Our 4 pillars is what? Passion, purpose, power, and profit. And that is our goal, to see you understand your passion, to fuel you into your purpose, to push you to power, and to show you how to profit. Again, this is our episode for The Truth About Money with our guest, Mr. Tony Chambly. And today we're going to be discussing the benefits to the infinite banking concept. So who is Mr. Tony Chambly? He is the CEO and the president at Core Financial Partners, also certified IBC practitioner with the Nelson Nash Institution. Tony believes Tony believes in helping people grow their wealth through efficiency of money and with cash flowing assets over cash accumulation. Tony teaches his clients wealth outside Wall Street and takes them through a unique process that shows how non-traditional money methods can accumulate into true and lasting financial success. Tony focuses on impacting his community through financial education and pride himself in helping individuals, families, and entrepreneurs employ their infinite banking concept. With Tony, every one of his clients' goal becomes his crusade. Please welcome to the show, Mr. Tony Chambly. Welcome to the show, sir.
Well, thank you. Thank you so much for inviting me, Melissa. I appreciate you inviting me another month to be able to share some information that I believe is life-changing. I know has changed my life. So once again, thank you. It's my pleasure.
Wonderful. Well, it's always an honor to have you here because, again, the Bible tells us that people perish because of the lack thereof, the lack of knowledge. And we really want to be able to give the knowledge to our people that are listening on the radio live, people who are listening back on the podcast. We want them to get the information so they can say, you know what, I know it now, because when you know better, you can do better. So let's get right into this concept, the benefits to the infinite banking concept. So can you share with us, Tony, some of the benefits to utilizing the infinite banking concept?
Absolutely. One of my favorite subjects. The infinite banking concept, first off, is it's definitely benefits that are life-changing. I want to start off with that. And the first benefit that I can think of is gives you safety from creditors and lawsuits. A lot of people concern themselves with a frivolous lawsuit coming against them, especially the more you have, the more people want to take. And here you don't have to worry about that. It's set up where it's protected from lawsuits and creditors. I've seen people that had credit that creditors can actually tap into their bank accounts from the traditional banking system, and you don't have to worry about that here. The second benefit, I would say, would be that you get guaranteed returns on your money. That means your money is guaranteed to grow. Where in society that you could think of somewhere you put money and it's guaranteed to grow? It's every single day we can look at our accounts with the infinite banking concept and see growth every single day. And I love that because it's guaranteed returns on it. Even though the dividends that are being paid are not guaranteed, it has not been missed. Over 100 years, dividends have not been missed with the companies we're partnered with. So that's the next important benefit. The next one after that would be the third one, I would say, would be the tax-free ability you have in transferring your money over to your heirs. So a lot of places where a lot of money is being warehoused, when we come to the end and we move on, we pass away, a lot of what's happening is estate taxes are being taken. So at least 20 to 40% of most people's wealth is being taken and being paid to the IRS because of estate taxes. And here, you don't have to worry about that. You can transfer your wealth 100% of it over to your heirs as far as the way it's set up and the way it allows it to be protected from anything else other than your family getting what it is that is rightfully theirs. Also, we in this particular setup, you have tax-free growth. And I love that because where most people grow money, Uncle Sam is right there with his hands out. And what I mean by that, it's coined and is named in the industry as capital gain taxes. So if you're under the sound of my voice and you're wondering or, seeking out where can I grow my money and not have Uncle Sam be a part of that as well, because you already pay taxes on it and on the earnings of it. And in so many other ways we're being taxed, but why not position yourself to grow it without having to have others participate in it? And that's what I love here with this concept. Also, it's set up for tax-free withdrawals. When you have your money in most qualified plans, there's only a couple of exceptions that you don't have to pay taxes on withdrawing. Here, we don't have to worry about it at all. We don't have to worry about it when it goes in, while it's in there growing. You don't have to worry about it when it withdraws. So it allows you to have all of what's rightfully yours when you're ready to retire or ready to, call it quits and spin it down. It's there. Every penny of it would be yours. And then you have an additional benefit such as guaranteed loan options. Your money is not set to be touched. It's set to stay and allow it to grow uninterrupted. And because you're able to do that, you're guaranteed to get a loan against your account, not from your account. In other words, if you had $100,000 sitting in one of these accounts and you came in need of $70,000, they would lend you, the financial institution would lend you up to 92%. So obviously they would definitely lend you $70,000. And that's the beautiful thing, that you guarantee that you have first options no matter what other money is being utilized in their system. You're guaranteed a loan up to 92% of the cash that you built up into it, that you warehouse your money in this particular account. And then you also have unstructured loan payments to pay the loan back. Isn't that beautiful? Think about you being able to get a loan from somewhere and being able to set the perimeters and the schedule of paying it back. You can say, look, I want to take 15 years to pay this back, or I want to take 2 years to pay this back, or I want to, not even start the loan payback for 3 years after getting the loan. You have 100% autonomy on how to pay the loan back. I love that feature. Last couple benefits I would like to share with you is collateral opportunity with this. Collateral opportunity just means you're never interrupting your growth. One of the wealth principles that I learned from my mentor is that wealth gets accomplished by uninterrupted growth of your money, of your capital. And most of us are growing our money, spending it down, growing it back, and you're never able to have all of what you could have had if you didn't interrupt it. This gives you an opportunity to do that. You can leverage it. You can collateralize it. And then these type of companies, which is insurance companies, they have equity reserve accounts just for us to be able to borrow money from. And it really makes your entire portfolio efficient. the last thing I would say is offers you liquidity, use, and control. When you talk about liquidity, use, and control, you're talking about what the wealthy surround themselves with and what they put themselves in a position of liquidity, use, and control. We're taught, we would say the layman, we're taught to really give up control and don't have it as a place to go use it whenever we need it, and you don't control it. And that just is the total opposite of being most efficient. So those are the benefits, I would say, Melissa, that I believe make the biggest difference in why I believe there's only one place to really do this with, and that's a special design whole life policy to a dividend-paying insurance company, mutual insurance company.
Wow. And I'm glad that you clarified that it's a mutual insurance company that is going to be utilizing this process to get this started. And you're right. When I think about what you said, safety from the creditors and lawsuit, guaranteed return on your money daily, tax-free ability to transfer it to your heirs, tax-free growth, tax-free withdrawal, guaranteed loan option, unstructured loan payback, collateral leveraging your money, and liquidity, use, and control. I think of the rich. I think of, Donald Trump. When you think about all the lawsuits he has, the man is still wealthy. Why his money is not tied up in regular banking concept. His money is tied up in an untraditional banking concept. So thank you for sharing that. And you just touched on the mutual like the system that it's using. Can you just give us a little bit more on that, the system that gives us all this benefit? What is that system?
Sure.
Are they taking advantage of? Yes.
Sure. It's been around. The system has been around for over 150 years. And it's real practical, but it's just not being taught in the public. It's not being taught in school. It's the elite that know about it. The banking system now uses it more than anybody else. And also corporate America is using it as well. This is where they're warehousing their money as well as the leveraging their money. And so what we're doing is making sure on this type of show is making sure we know that this is available to you and I as well. There's nothing special about being able to get one. The system is being done through a whole life contract. A whole life contract has to be done through a mutual insurance company, and to make sure the insurance company is dividend paying, right, and that they at least have paid out dividends consecutively over 100 years. Those are the criteria for us looking for the right partner and working with the individuals and getting them set up with this. Now, there's a special setup with this that doesn't allow the traditional or the average person that can market and sell life insurance. They have not been taught this particular way of doing it, and it's a special design of a policy. The great thing about whole life, you can have 20 different people that can come to you about a whole life contract, and we can set them up and customize it to 20 different people, 20 different ways. And so it's very flexible to do a lot of different things with it, and we've found the way that it works and almost operate just like a bank. And you being controlling of the bank, you can leverage off the bank as well. So the system is all about taking your funds that you normally would save or you would normally put in a position for protection. You take and combine those two together, and then now you're positioning yourself through a whole life special design insurance contract to become your own bank.
I love that. And 150 years, to have something like this around for 150 years, and some of us haven't even heard of it, that to me is where I say we're always in the dark. So I really, truly, I'm so thankful that Core Financial Partners do exist. And what you have done, you have took it to another level where you got your certification. You are certified as an IBC practitioner with the Nelson Nash Institution to be able to share this knowledge. So you're not just talking out of just talking sake. You are living the walk. You are activating the walk because you are the president and the CEO of a firm that literally had to go get a certification to be able to practice IBC practice for the community. So thank you for just your service and for you extending your knowledge to learn something that over 150 years been used, but as a person like myself, an African-American woman, have never heard of until I met you. So thank you for your diligence when it comes to your knowledge.
For sure, for sure. We wanted to make sure here at our firm that we're not misleading people at all. Not 1% do we want to go in the wrong direction. And that was one of my concerns in coming to the financial service industry as a consultant. You know, how do I make sure I am very accurate, pinpoint accurate to every client's needs and desires and direction that we lead them to? And so going and becoming a graduate of the Nelson Nash Institution was just the natural thing to do. And then the things I learned there, the things I understand now, it's life-changing. My excitement every day to get up and be able to share with individuals like you, Melissa, and many other listeners and people that we come in contact with or indirectly come in contact with, it's endless. I wake up with this, I go to sleep with this, and just making sure that we're getting this out there through as many people having as many people hear about this and understand this as much as possible.
Wow, thank you. Thank you so much, because many people are right now listening and they're not used to hearing about the IBC concept. They're so used to having a traditional bank. So how would we compare a traditional bank, which everyone is used to an IBC bank?
Sure. I'd like to give a comparison this way. If you had a choice to have Bank A or Bank B, you tell me which one you think will be favorable for you and your family or your business. Bank A says, look, you deposit your money into our account and we give you anywhere from 1 to 3 to 4% return. Also, when you deposit your money into our account, we'll lend you back money, but we're going to probably charge you closer to 18 to 28%. Also, you know, you putting and banking with us, you have to qualify for us to lend you money. You have to be able to show income that makes sense to us, that it puts us in a secure position to lend you money, and we're going to make sure we get it back. Also, with Bank A, we have to make sure that your credit worthiness is up to par. So we're going to check all of that. We might can get back to you immediately. We might take a few days to let you know whether you're approved or not. And then, by the way, if you have a certain amount of money into our bank and you need it, if it's over $10,000, we might have you wait for a couple hours to a couple of days to get that money from us, if that's the case. And by the way, when you get money out of our account that you put in, you're no longer making money off that money. That money is going to be separated from you forever, right? So you're no longer going to be, we're not going to be on the hook to pay interest to those dollars. So that's Bank A. Here's Bank B. Bank B says, hey, you deposit money into our account. In addition to you deposit money into our account, it's going to purchase you multiple benefits, such as a death benefit. So every dollar you put in, let's say it 10 to 20 times the death benefit that you can leave to your heirs. Also, when you need to get money out and borrow against it, we guarantee you a loan. You don't have to qualify for it. You don't have to go through an application. You don't have to prove your income. You don't have to do any of that. All we know is that the amount you have put in the warehouse, your savings into this account, up to 92% is guaranteed to you, right? So this is Bank B again. Bank B says, look, whenever you want to borrow money, we're going to guarantee you some borrowed money, right? As long as you didn't use all of it yet. What we also going to do is guarantee you're still going to get the rate of return on your money. Let's say it's 7-8%. You're still going to get that 7-8%, and we're going to lend you our money and let your entire amount of that's in your account stay there, and we're going to lend you our money. So if you had $50,000 in this account and you need to borrow 20, the 20 is coming from our general account. Keep your money in place. We're going to still yield you 7-8%, and we're only going to charge you 4%. So you have a net gain of 3 to 4% on your money. So your money is still growing, even if you go buy a car, go on vacation, take care of a wedding. All this is being available with your Bank B, right? And here's the last thing I'll tell you about Bank B is this. If you're warehousing your money here and you're saving your money here and it grows to being $100,000, but yet it grew your death benefit to being $1 million, and you know, and we all know the day is coming, you pass away, we're going to actually give your family that $1 million tax-free. Now, we are going to say this, though. If you have money that you didn't pay back that you borrowed from us, let's say you borrowed $30,000 from us because you had $100 that was available to you, you borrowed $30 and you didn't have a chance to pay it back, we're just going to deduct that out of the $1 million, and your family will get $1 million minus $30,000. So that'll be your collateral position, and that'll be our collateral position to be able to make sure we're still being squared away. How do you think, which deal do you think is better off for a family member or entrepreneur?
Bank B. I mean, off the top, Bank B.
With no question. Every single time, I believe anyone that understands the two differences would do that. And the thing I want to make a point on, Melissa, is that we're not comparing IBC's setup through a whole life policy with an investment. We're comparing it through safe savings. There's a difference between investment. Investment, you're willing to put your money at risk to be lost or to gain. This is not the comparison to that. This is a comparison. The money you want to be there when you go for it. The money you want to make sure it's safe and secure. This is what the comparison is to.
I love that. So just want to make sure, because I'm going to, the listeners are hearing this, and I know this is new information to them. So I just got $100,000. I decided to come to Core Financial Partners, and I met you, and I said, hey, I need to, instead of putting my $100,000 in a traditional bank, I heard about this IBC right on Women Emerge Radio with Melissa Lambert. How can I put this in as for my savings through this IBC process? So once I put this in and I get $1 million in debt benefit, what happens, say if I die? Does that $100,000 that I put in that came in as a savings, does it goes to my my family with the $1 million, or that cash value that I have goes to the insurance company?
Yeah, that's a really good question. When you put in, say you have $100,000 of your cash in the cash value in the policy, that purchased $1 million, so your family will get the benefit of the $1 million tax-free. So they don't get both, they get one or the other. Here's the deal, though. The way we calibrate these type of policies, the $1 million does not stay at $1 million. It grows every single year as you're funding it with more money. It's buying more death benefit. So most likely, let's say after 10 years, you fund it with $10,000 a year over the 10 years. So your cash value contribution has been let's say it's $200,000 by then, right? But your $1 million is now $1.5 million, right? So I always ask the question: do you want your family to take that extra $100,000 as a walk away with the $1 million, or take the $1.5 million? You would want the $1.5 million because it bought that extra $10,000 a year for 10 years. It bought the $500,000. Does that make sense? So that's the difference in our design. Now, you could set up where you get the cash value, but you're not going to have any growth. So your family works out better the way we set this up because it made more money from the money you were saving.
Got it. So there is a choice. I want them to hear me. There's a choice with this. So you can have your savings don't make money, where there's no growth, or you can have your savings, this $100,000, to grow over time, which will be, instead of $1 million in death benefits your heirs or your family will receive, they will receive $1.5 million. So your $100,000 over time bought you an extra $500,000. Am I correct? That's what you're saying?
Yeah, this is by theory. This is not actual numbers because everybody is different age, different health, and different gender. So, but yeah, by theory, your dollars that's building up your cash value buys more death benefit. It's called paid up additions.
Paid up additions. Oh, I love that. Okay. Again, you are listening to Women Emerge with Melissa Lambert. I am your host, and it's always an honor every second Thursday to have the CEO and the president of Core Financial Partners. He's also a certified IBC practitioner, Mr. Tony Chambly. And today we are talking about the benefits to the infinite banking concept. We already discussed the benefits, which is we literally talked about some of these benefits, which was safety from creditors and lawsuits, guaranteed returns on your money daily, tax-free ability to transfer it as your to your heirs, tax-free growth, tax-free withdrawal, guarantee loan option against your account. So that's 92% lending that they can give to you. Unstructured loan payback. I mean, come on, y'all. Collateral leveraging of that money, and even liquidity use and control. This is in a system that's been around for over 150 years, and it's through a whole life contract mutual insurance company. But that mutual insurance company, one thing Mr. Chambly shared, has to be able to pay out a dividend paid over 100 years, right? So I hope I covered that okay, Mr. Chambly.
You did an outstanding job. You did it.
Thank you. And, we are really digging deeper into this conversation. And I love this because the truth about money has not been told. We are told to use it, to earn it, to spend it, but we're not taught how to allow it to work for us. And I truly believe the infinite banking concept really is what will teach us that concept. So can you kind of share with the listeners a couple of examples of what the IBC at work will look like for them?
Sure, absolutely. Here's a couple ways that it could be considered to be used, and these ways have been something that we work on with my own business, or my own family, and many clients across the country. One thing for sure, you're going to know that your growth of your wealth is guaranteed to happen, right? You know that it's safe and predictable. You know, the interest rates are guaranteed never to hit a certain floor, and the dividends is the only thing that's variable, and they haven't missed a dividend payment over 100 years, so you know it's going to grow. So being able to know this is going to be there for me, your financial independence will happen. A lot of us call financial independence retirement, so if you rather me say it that way, I'll say retirement is going to happen, and you'll be able to predict you being able to have income come in through your life expectancy based off of this concept. Also, you can now be in a position where you can take care of a business startup. If somebody under the sound of my voice, I believe every household should have a business, to be honest with you, because there's so many tax breaks that comes with that. That's another story for another day. I wanted to share that many of our clients and many people across the country that understand this are using it for a business startup as well as business overhead. So, one of the things I learned in my early years of this is that don't use your money for any investment or any business expenses. You should take it through here and allow that insurance company be the payer of your business and your overhead of your business. Another thing you can use it for is to be able to take advantage of the tax game. I went over several different taxes that we're liable for. Why use your dollars that are gone forever to pay any taxable liability that you owe the government? Why use your dollars when the insurance company that we're talking about will allow you to use their dollars? Because think about it, you're getting a net gain of 3 to 4%. If just according to your situation, let's say 3 to 4% on spend dollars. So if I owe somebody $10,000 in taxes, if I give them tax dollars, if I give them those dollars out of my traditional bank account, I just write a check. That money's gone forever. But if I do it through this, think about it. I'm giving them the insurance company money. My $10,000 is still earning me 7-8%, give or take, every year, and they only charging me 4%. I got a net gain of 3 to 4% on those $10,000 for the rest of my life and the rest of your life. That I know that makes sense when you hear it like that. So that's one thing. So anybody that's spending money on taxes every year, Why not take it through a system like this? Also, you can pay for college. This trumps the 529 plan by 1,000 miles. If you're listening to the sound of my voice and you're saving for your kids' college, if you want to predict and control liquidity use and control this money when your kids are to go to college, or maybe they change their mind and you have to now change your business, your financial plan, you don't have to worry about that here. How about also taking care of college will also take care of your financial independence / retirement? Because the same dollars that you take care of your kids' college can recapture those. You can recapture those same dollars by the time your retirement takes place to now have every penny in retirement. It's so many of us, Melissa, that are tussling between how much of it do I use that I've been put away for my kids' college expenses versus my retirement. Because most people hit within that 15 or 20-year range of their kids going to college of their retirement as well. So it's not an easy decision to make, or you have to really, amp it up to catch up what you lost when you spend all the dollars that you do for your kids. And here's the sad part about this, is that when it comes to college, the more you've put away, the more it's exposed to the government, the least money they want to give you. They want to actually penalize you for having done well for building for your retirement. They want you to use your retirement for your kids to go to college, right? And not support you in any way. And so how about in one of these contracts, one of these policies, Melissa, is invisible to the government to the degree that you have a position as though you have saved no money when all of your resources are going through this channel. And that's why I highly suggest don't do what the banks say, do what they do. That's why they hide their money. That's why wealthy people hide their money. The wealthy elite gets as much financial aid for their kids to go to college as somebody that didn't save a dime, because all their money is hidden from it being exposed to be penalized for doing what's right, right? So that one was really a strong one and passionate one for me. Also, emergency fund. Where are we warehousing emergency funds at? Emergency funds should be in every household. Everybody should have a minimum $10,000 set aside, right? I do not believe, here's a free tip for everybody on this sound of my voice. You should not be saving money for or putting money in a qualified plan, which is losing liquidity use control, and not have $10,000 liquid to you that's in reach. There's no such thing, right? There's no such thing. It would save for different emergencies and different things that can lose you more money, or you then pay for using somebody else's money. That's going to be more than it is grown in that account that you supposedly have it in. I can go to so many reasons why we have to be careful on how allocation should go. Last couple that I have that I want to share is being able to leave a financial legacy. Think about all the money you're using to live your life, and you're taking a good portion of it through your banking system that you now become your own banker. Think about that was 10% of your income, 20%, 30%. And every dollar that you're putting in this particular contract, this policy, is building legacy for your family. That's why we coined it as guaranteed wealth for the future. Your kids and grandkids are guaranteed to have wealth because every dollar is building for legacy money. With the same money, we go buy cars, go on vacation, take care of weddings, take care of educate. All these things are going to get done. But it's how we do them that makes a difference, right? And then also taking care of your major expenses. I just went over most of them. Taking them through this channel. Let's do it the smart way, the most efficient way, and still get the same or better results. The last thing I would say is purchasing income-producing assets you should be able to do with this. Because if you're building this up and you're taking it through here, it's going to grow. The money that you normally spend away from yourself, you'll be capturing it, and it grows for you throughout the rest of your life, right? And here's how I believe you should plan for your future. You should plan to buy income-producing assets. Buy assets that's going to make money for you. Don't build your money up and do what we've been taught traditionally to save it, and then have what they call the spending fund to spend it down until it runs out. Most people run out of money within the first 17 years of them retiring. That plan does not work. The plan that we have to be on is that we have income-producing assets that makes money for us well past our expected life expectancy. And I went over this a couple calls ago. A couple times we did this, Melissa. It's just easy to remember and easy to relate to is real estate properties. What if you had 10 units paying you $500 a unit? That's $5,000, right? If your lifestyle is $5,000, that's the answer right there. That's how you retire early. That's how you position yourself for financial independence. Even if you kept working, at least you know that part is done. Now you want the luxury lifestyle. So this is where we want to make sure. I think about athletes, Melissa. It's like athletes. They do not go and figure things out by themselves. The best athletes in the world know it's worth them getting a coach, a personal coach. It's worth getting a consultant, right? Michael Jordan, trust me, had a shooting coach, right? LeBron, he has a workout coach. Everybody should have someone to be that person. This is what they do, and they can guide you. They can direct you to the promised land in a way that you're most efficient, and it's most likely to happen because it says in the Bible that the multitude of counseling, right, there's safety there, right? And I'm not saying go out and get a bunch of consultants. We have a firm that's waiting for you. We have people that are IBC practitioners that are waiting for you to be able to walk you through this process and make sure it's being done the right way.
Wow. I love just hearing you talk because this is information I believe that is necessary for our ears. And especially, I'm going to bring you back to one of the, you talked about the 529 plan. And I wanted to go back to the process of having a college contract for our kids. Because with the 529 plan, right, you can only use it for college. Am I correct?
You can only use it for college for the most part. They've changed the rules on it recently because of the way things are right now. They have changed the rules, so I'm not in a position to speak on that. But for the primary purpose of it, it is for college. And many people got caught up and lost serious capital based off of if they had to alter or do something different because the kid doesn't want to go to college or go to college and it's not for them. Things change quickly, and now it's almost being done in vain, all what they've done to prepare for their kids to go to college. So you have to be very careful on how these plans work and have a lot of restrictions to them. They're controlling it 100%. They're controlling it. So we have to do our due diligence, and we do have experts that we help our clients out with that as well.
Because I wanted to kind of the reason why I shared that was if we utilize the plan that we have with the IBC plan, we can save for our college for our children, but we can use that even for their wedding. We can use that for other things compared to the 529. I can use that and say, let me take some of it and put her through college, and the other rest I'm going to let that be her car money. It's designated, the 529 is designated for books, for tuition, for different things when it comes to
higher
school.
Education.
But it's higher education. It's not designated to buy a car. It's not designated to put down a deposit on a house. It's not designated to finance your wedding. But if we utilize a contract with IBC to save money for our children to go to college, we can say it's for saving for college, but we can still utilize it for other things as well. Am I kind of correct on that?
No,
sir?
You're right on point about that. Those facts are 1,000% correct about it has to be used for higher education. It cannot be used for the other needs and desires for that young adult at that point in their life. Can't be used for just anything. With it, the same capital savings being redirected into a IBC contract, and you become your own banker through this, it could be recapitalized or recaptured, like you mentioned. It could help them get their first car. It can help them now pay for college or higher education, trade school. It can help them get married. It can help them, now with buying their first home. It can help them, build towards the extracurriculum for their kids and the legacy for their kids. I mean, it goes on. It retires them. The same money retires that kid and the parents that set it up for their kids as well. I've seen the same contract do all that for a couple generations because they're set up. Let me say this, Melissa. They're set up for us, for you and I, to take care of 3 generations. This type of contract can take care of the next 3 to 4 generations.
Wow. And I wanted to make sure you say this because many of us that's listening on the line right now or listening to the replay may be influenced or told to set up a 529. But I need you to understand the difference. You can use the 529, yes, but why be boxed in? Why allow your money to just grow for only one use while you can let your money expand and grow for multiple use for your child? So I just wanted to throw that out there so people can get that concept as well. So I want to kind of talk about, and I love the fact that you also mentioned certain things within this you can use the IBC way with. I love you said the emergency fund, and you're telling us as consumers at least have $10,000 set aside for that emergency. Right? And then you talk about, major expenses, and you talk about investment and income producing assets. These are things that can be used with an IBC policy. So I want as much people as you listen and you're getting the knowledge, remember, what is this Second Thursdays all about? The truth about money. The truth about money. Mr. Chamblee is an expert. I am not the expert when it comes to finance, but he is. He went all the way to get certified as an IBC practitioner with the Nelson Nash Institution. Then he decided, you know what, I'm not only just going to get this, I'm going to activate it in my own firm, where he is the CEO and the president at Core Financial Partners, him and his lovely wife, LaToya. So they are really a part of this process day in and day out. He said it earlier. He lives and breathes this information. This is his ministry. So I want you, as you listen and you're taking heed, activate the information. Learn more about CORE. Learn how you can be a part of this process. Learn how you can get the consultation that you need so you can truly understand the truth about money. So I'm going to ask you another question because I want the listeners to understand this as well. How does the IBC contribute to building long-term wealth? Because we know the traditional bank doesn't contribute to that, right? It doesn't. The traditional bank do not contribute to building long-term wealth. So tell us, Mr. Chamblee, how does the IBC this concept contribute to building long-term wealth?
Great question. Thank you, Melissa. It contributes towards building wealth, and I like the word contribute because it's not the wealth builder. It's the pass-through, meaning if I'm going to, the way you build wealth, my perception of wealth is putting your money in a position by, first off, let me start from scratch. The thing that changed my mind about money, my relationship with money, was not to work to pay bills. Work to buy income-producing assets that's going to make you money. When assets are making you money, that means you're giving money in an assignment, and that assignment is allowing them to go out and produce more money and bring it back to you. That's what I mean by that, income-producing assets. A lot of us are putting money in a position where it just grows and goes wherever the wind blows, meaning the wind blows to me mean the Wall Street go up or down. You're leaving yourself very vulnerable to someone else that is actually instigating the ups and downs on Wall Street. That's just my opinion about it. I don't know facts, but I just know what I see. So here, I believe if you buy income-producing assets, real estate, vending machines, it could be, a business startup. You don't even have to be involved in the business. You can be just an investor. and allow you to get paid the profits, the dividends, and things of that nature. So that's what we want to start thinking about. Make these policies, make this banking system, because I call the policies that we own as our banking system. It's like owning, let's say you had your banking was being done with the Bank of America, right? If you own the Bank of America, wouldn't you want more than one branch? The more branches you have, the more you capture the different marketplaces. Well, we have to think about our own banking system the same way. So at this present time, as we speak today, we own about 14 policies because of all the different things that go on in my life. So I use each one of them has its own assignment. So if I'm using a couple of them for income-producing assets, I want to keep them filled up, and then that income-producing asset brings money back as I used it to buy it, and it's going to bring it back to pay the loan off, and everything else is profit, right? Write down this word. That's called arbitrage. That's one word, that's one terminology in the financial world that's not being taught to the layman. Arbitrage is what the banks are doing. What they're doing, I don't know if anybody under the sound of my voice knows that banks don't use money to lend out. They use our money to lend out. They don't use their money to lend anybody any money. So that's arbitrage, because when they lend us money, it goes out to us and we pay it back with interest. They don't have any skin in the game. Think about that. Why can't we do that? Why can't we borrow money from a lender that's willing to do this operation with us, which is the whole life mutual insurance companies, right? And they're going to give us their money to go do what we want to do with it, and it should be most times major expenses and investments, buying an asset that's going to make us some money, make the money, pay them back, and the rest is yours for that life of that asset making you money that could be forever, right? So to me, infinite banking helps us become and be a part of building wealth, that you make it a pass-through and use the leverage of them giving you their money up to 92% of what you've built yours up to being able to go and do whatever you want, and whatever should be taking good care of your family and buying income-producing assets. Now, even if that asset does not work out for some reason or another, right, you didn't lose any of your money. They gave you their money, and they give you a lifetime to pay it back. In worst case scenario, if you never have a chance to pay it back before God calls you on, guess what? Your death benefit is going to be minus. It's going to be minus from your death benefit, and your family gets the remaining. Where can we get that kind of deal from? There is nowhere under the sound of under the sun, nowhere under the sun across this world can you get a deal like that. And it's just not being shared with us. It's not being taught to us, right? And there's information and education behind it when you set it up. How do I use it, and how do I pay it back, and all that? We go through all that. We don't leave any stone unturned to learning everything is needed in order to be most efficient. So hopefully that's helpful. Make it a pass-through. There should never be an investment or retirement plan that your money is hitting straight out of your earnings straight to the account that has any risk to it or has any level of you can make money or lose money before it hits this account. Because why would you put your money at risk when somebody else is willing to do that for you and still give you a net gain of your money?
Drop the mic, because I just love when you get to this place, because one of the things that I love about Mr. Chamblee is his passion. Remember, the 4 pillars of Women Emerge Network and Lambert Elite Consultant is passion, purpose, power, and profit. Mr. Chamblee operates in all 4. You can tell he's passionate about sharing the knowledge about money. You can tell his purpose is being served by educating people on how to use money. You can tell he's pushing everything into power. Why? He has a firm called Core Financial Partners, and you can tell that he will profit because he is a part of the system, the biggest system in the world, the biggest industry in the world that should allow you to profit. So, Mr. Chamblee, and then I'm just saying this statement, I put it in bold on my paper, and I'm going to tag this on Facebook later on. Giving money an assignment to make money for you. I'm going to say that again because when Mr. Chamblee said that, I wanted to run across the room, okay? You got to learn how to give your money an assignment to make money for you. And make it a pass-through. Oh, my gosh. Mr. Chamblee back in the days used to play football. So when he said make it a pass-through, all I saw him was with the ball just running through. You know, I'm not a player, but when you said that word, make it a pass-through, I thought about somebody having the ball, and, I don't know the people that plays the defense or the offense. I don't know, whatever. I just can see somebody taking the ball, and they're just guarding them to go through the end. That's how your money's supposed to have that assignment. Let that be the assignment to get your money through the pass-through. And I love how you really kind of take us into that. So you have this beautiful and this amazing company that's run by yourself and your lovely wife, and so many of the core core partners. So tell us now, how can we connect with you? How can we come to one of your sessions? Because I know that Core Financial Partners does their webinar, their sessions every Tuesdays and Thursdays, and I know you stated that you will be expanding to more days. So tell us more. How can we connect with you? I know you have a couple of websites for us to go check out, but how
Sure.
can we connect back with you and Core Financial Partners?
Sure. I give 3 links. All 3 links can have you request a call or a meeting or to join one of our webinars. The first one is our corporate website. It's Core Financial Partners with the S.com. Core is spelled C-O-R-E, Financial Partners with the S.com. The second link I would love to give you is to be able to see a recorded videos that we put in place. And the videos are very short. They're 2 to 4 minutes apiece, but it strings along the different concepts, the different verbiage, the different understandings that you will want in order to kind of really get a better picture of how this could work for you and your family. That link is learnmorewithcore.com. Learnmorewithcore.com. That's going to take you directly to the videos. It's about 13, 14 videos that are 2, 3, 4 minutes the most a piece. And the last one this is one of the things I really am proud of. We put together a short 12-minute video that actually shows you how to use this strategy and get rid of your debt, including your mortgage, and build your wealth with the same dollars. I mean, think about that. It's almost unbelievable, but it's real. I'm living it right now. So go to CoreDebtStrategy.com, CoreDebtStrategy.com, and watch that 12-minute video, and just get back with the person, though, that you learned this from. If you're hearing this and you're connected to a consultant, if not, get with us. We want to get with you. We want to help you. We want to teach you. We want to guide you. And that's our mission here. Our mission is all about getting you to and reaching your goals.
Wow. I am so excited about just this journey with you, and to be able to see that Core Financial Partners is in the lives of so many in different cities, in different states, and I'm saying globally, because this money is a global currency. It's not just a United States currency. And I'm going to prophetically speak that LaToya Chamblee and Tony Chamblee will be on stages around the world, because they're so knowledgeable, and their passion and their purpose that will fuel them into power. I believe that can also allow them to profit globally. So I thank you again, Tony Chamblee, for being an instrument, being a vessel to be used mightily to share the impact track of how we can learn the truth about money. And again, you are listening to Women Emerge with Melissa Lambert. You can follow me on Facebook at Melissa S. Lambert. That's Mellisa S. Lambert. And on Facebook for Women Emerge Network and Women Emerge Wellness. On IG at Women Emerge Now. You can also join Women Emerge Network at womenemergenetwork.com. And if you haven't done so as of yet, I have released 2 books this year. One of the books is called Focus. Let's Focus on You. It's a journal, a 90-day journal. And the second book that I released was 31-Day Journal to Revitalize Your Body. Check out those last 2 books that I dropped. You can go to Melissa, that's Mellisa, books.com. I know that you are going to be loving the next episode of Mr. Chambly, The Truth About Money. We will come back on again the second Thursday of the month of June. So until next time, take care, take charge, and be great. Bye for now.
Thank you for listening to Women Emerge with Melissa Lambert, where Melissa speaks with leaders, experts, and motivators who share their journeys and their stories through personal and professional growth, knowledgeable tips, and lessons learned that will empower you to grow. Follow Melissa and Women Emerge Network on Facebook, Instagram, and TikTok at MELLISASLAMBERT and at Women Emerge Network. And visit www.womenemergenetwork.com. Remember, when you know better, you can do better, especially when God is for you.